Welcome to weekly view on markets. Markets suffered a big loss of 2.7% during this week. Mid cap and small cap sectors lost 5 and 6% respectively. There was all around selling in the markets with all sectors except information technology. FIIs continue to sell and the DIS are buying on dips. They are almost matching FII selling. But there was panic selling by retail investors during this week. DII buying is more than FII selling, but markets corrected big due to panic selling by retail investors. As per technical theory, when retail investors get into panic mode and they sell off, that will create panic bottom. So I am expecting market to stabilize around current levels and create a panic bottom in coming days. The weak hands are going out of the market in panic selling. And when the weak hands get out of the market stabilizes and starts moving up. Will it create a panic bottom? Yes. As per technical theory, this sell-off by retail investors is likely to create a panic bottom. Economic indicators remains strong for the full year. I expect markets to rebound after a few weeks of consolidation at present level. I am not expecting a big correction here onwards. Now let us look at performance of indices during this week. Nifty lost 666 points, closed at 23,532. Bank Nifty lost 1,736 points, that is around 3.35% loss, and closed at 50,179. Midcap Index lost 5.37%, that is 3,066 points, and closed at 54,043. Small Cap Index lost 6.20%, and that is 1,162 points, and closed at 17,601. India VIX is at 14.77. Now let us look at sectoral performances. All sectors lost out except information technology, which gained about 1.53% during this week. PSU banks lost the most, they lost more than 7%. Metals sector lost about 6%. Oil and gas, commodities, realty sector all lost around 5%. Energy sector, manufacturing, FMCG, healthcare, media all lost around 4 to 5%. Infrastructure, auto companies, pharma sector, NBFCs, public sector companies, private banks all lost between 2 to 3%. Consumer durables and private banks lost between 2 to 3%. So it was a sea of red. Almost sell off was seen in all the sectors. This kind of sell off, especially by retail investors, where there was sell off in almost all the sectors by retail investors. It was a panic selling by retail investors. Why I am selling it? It was a panic selling by retail investors is that FII selling was matched by DII selling, DII buying. DIIs have bought more than FIIs during this week. Despite that, market has seen a sharp sell-off or sharp correction. That is uh, indicating the sell-off by retail investors. And when the retail investors sell off in a panic, they get scared that market may fall further. that drives out the weak hands out of the market, and that will create a panic bottom, and that will form the base, and there may be some consolidation till all these weak hands get out of the market. Then the market will start rising again. This is a technical theory which describes the market cycles. That is exactly is looks like playing out in the market. Now let us look at technical charts. This is the daily chart of Nifty. I had predicted this market fall somewhere in the third week of October, and I had drawn this pattern. The target for this pattern is almost reached now. The target was 23,532, and Nifty has exactly come to that level. Now, going by the technical theory and looking at the market scenario as I had described, this is likely to form a panic bottom, and from here, market is likely to consolidate for a few more days. The chart of Nifty mid cap index. Here too, the pattern achieved the target, and I expect market to consolidate around this level, and after consolidation it will give a trend reversal signal. This is the chart of Nifty small cap index. The small cap index has shown strength. It has not fallen like large cap and mid cap. It has not come to the target level in this. But will it come to 16,500? Looking at the market structure at present, I don't think. It may come at around 17,000 levels, or from at the present level, that is 17,600. So Nifty mid cap index is likely to give a reversal between 17,000 and 17,500. I will depict that trend reversal signal in my weekly view and advise investors to buy during that time. Investors have to have patience and wait for this. This is a Bank Nifty index. Now it has broken below the this channel, and it is at the support level at present. Here we can see Bank Nifty is at the support level. Whether Bank Nifty will recover from here, I feel yes, it will recover from the support level because several banks have given good quarterly results. So there is no reason for the Bank Nifty to fall from here. So it should recover from the support level. Now let us look at some of the fundamental factors of market. India's macroeconomic indicators continues to remain good. RBI forex reserves is at 675.65 billion US dollars for this week. It is down by 6.4 billions. Forex rate is at 84.40. The rupee has weakened against the dollar. And looking at the statistics, I feel that RBI must have sold dollars in the open market to stabilize the rupee. That is why RBI reserves are down by 6.44 billions during this week. Dollar index has moved up. It is 106.6 level. So the strengthening dollar index indicates the overall demand for dollars globally. That is another reason why rupee is weakening. That crude price has further come down. It is at $71.04 per barrel. Lower crude price is good for Indian economy. It will bring down our import bills. That will help to bring down inflation and contain the fiscal deficit. And also it will lower oil price will boost RBI forex reserves. Gold price is at 74,031 for 10 grams 24 carat. Gold prices have hit 80,000 for Diwali, and after the US election results and statement by the elected president Donald Trump, the gold prices have crashed. The dollar index has gone up. So dollar is strengthening against all currencies. Gold as well as silver prices have dropped after US election results. In India, the quarterly result season for second quarter is over. Results are quite weak. The top line growth, that is the revenue growth of company is only about 9%, and bottom line growth, that is the net profit, has grown only by 5%. The market is trading at premium valuation, expecting that corporate performance should be at around 20%, in the range of 15 to 20%. That has disappointed the market. That is another reason for the market correction in last 1.5 months. High interest rates and credit cost has impacted the company's performance, and the company's margins have shrunk. Company's margins have shrunk, and signs of our economy is slowing down because there is no demand for goods and services. Companies are not able to grow their top line. So it is slowing. Signs of economy slowing down is evident from the top line growth of the companies. So RBI should cut the interest rate, but there is another problem. The CPI based inflation for October 24 has come at 6.21%, which is higher than the RBI tolerance band of 6%. The interest rate cut may be delayed further when the inflation is above the RBI tolerance band. They are very much unlikely to cut interest rates. If the interest rates are cut, that will give a boost to the share market. And why? Because it will boost the top line growth, that is demand in the economy. The credit cost of the companies will come down. But in the present scenario, considering the rising CPI inflation, RBI is unlikely to cut the rates. One good thing is that the GDP estimate growth rate has been maintained at 7% for the full year by Moody's. The report has come in this week. So long term Indian economy looks good. The short term inflation and other things are a hurdle, and high interest rate prevailing at present is hindering the demand in the economy and growth of top line of the company. Tax collections are going up and tax base is winding, going by the tax collection data that is published. We have looked at the charts. The charts are at support levels. Markets may not correct big from here. Consolidation is expected. There may not be sharp bounce back considering corporate results, the condition of the inflation and delayed interest rate cut. investors need to have patience. This is all for this week. If you like my video, please subscribe to my channels, share with your friends. You can ask your questions. We will meet again next week. Thank you.